Morning, everybody. How are we all doing? Happy Thursday. Nearly non-farm payroll day. Morning, Danny. Morning, Evil. Morning, Tom. Are you still using RoboForex? Yes. What account do I recommend? Prime and affiliate link on the website. Let me find it. If you just go to here, just go to recommended brokers. You don't have to be an affiliate, but obviously it's nice. I earn maybe $50 a month as an affiliate, so all helps. However, if you are going to become a RoboForex affiliate and you deposit 100 grand, I'll obviously earn a lot more money, but there's not many people doing that. But nice of you to ask. There it is. Morning, Paul. Morning, xrupdate.news. Excuse me. So today is where are we? Thursday. So we've had the Bank of Japan rates this morning, 0.25. We've got the press conference, which I think has just finished, was going on for quite a while. Ueda talking a lot. So we've had a big negative move this morning on the yen, or positive move rather on the yen. All the yens have come down. Morning, Florian. So we've had that this morning, 0.25. Rates, Aussie, a little bit more weakness off of the retail numbers. This afternoon, we've got the CAD GDP, and we've got PCE and unemployment claims for the US dollar. So this afternoon, 12:30 basically is all the news for the US. So this is where everything's going to come in. So yeah, pretty busy day basically. Tomorrow, obviously, is non-farm payroll. We've got the unemployment rate coming out, and we've got the PMI, basically, for manufacturing as well. So fairly busy time ahead. The US, the yen, basically, freezing rates was as expected. There was an awful lot of talk out of Ueda in the press conference. Not an awful lot about Forex movements. However, there was a little bit announced about Forex, just that they're keeping an eye on it. They're going to do a bit of an analysis into it, obviously, because the yen is screaming away. So, yeah, pretty much positive yen, basically, as you can see. So all the yens today are ADRs. Whether we're going to get sustained strength or not, we'll have to wait and see. But yeah, it's obviously positive yen. Everything's going well across the board for the yen. So hopefully we'll start to get some of these legs unwound. This is basically continuation potentially from the intervention. I find it really hard to believe that the market is still going to try and carry trade on this yen, but they seem to be trying very hard. So I've got short on the Swiss yen at the moment, but anything yen wise, you will have only been going short if your position mean reversion trading, because obviously it's been kind of slightly pushing up. So this is just unwinding some of that move. Whether or not it turns into a reversal, we'll wait and see. That's the 150 level, the US dollar yen, which is what the Japanese are watching, or always watching as their line in the sand. But yeah, apart from that, today nothing else has hit ADRs. We've got a weekly hit on the euro pound as well. So that one, as you can see, the ADR on this is only 38. So from this low here, from Tuesday up to there, that is your average weekly range hit, and as you can see, it's coming down. Bloody pound. So yeah, budget obviously yesterday. Really don't know what to make of this budget, and the market will make its mind up obviously, but we've got a bit of a rally on the pound this morning. Oh, I should have taken that off. Basically, I got back to break even yesterday, and I was hovering around sort of somewhere between $300 to $800 in profit on it constantly yesterday with the budget. And I had multiple opportunities to take it off That was about $800. And then it pulled back a little bit. Then it pushed down a little bit. Then it came back at the end of the day. I looked at it last night and I was like, shall I take it off? Nah, looks like it's coming down. Looks like it's pulling back and it's going to put a low in. Then it came down this morning and double bottomed. So we'll see what happens with the pound. But the budget yesterday obviously was the big news. We didn't get a dramatic drop on the pound pairs yesterday. Obviously, the market was negative because it is a massive borrowing. She's borrowing a lot. Obviously, that tends to be negative for the currency. Whether or not it is going to have a positive or negative impact on economy, which is what this is all about, this budget, we'll have to wait and see. So the market obviously yesterday, as I kind of expected would happen, had a negative reaction to it. It could have been a hell of a lot worse. But there's no real follow through so far today. So we'll wait and see what happens. But obviously every pound pair has given a structure break. And this could well just be a pullback drop on all of these. So the outlook for the pound is difficult at the moment to forecast, really. So we'll wait and see what happens with it, but didn't get the massive drop that could have potentially come yesterday. Clean breaks on the FTSE and the DAX. I've just been stopped out on the FTSE for a small profit, tiny profit, £79. We got beyond 2R and we've pulled back 2R basically. So I've got a 2R trailing stop on. So when we hit 2R, I automatically protect the position. Unfortunately, it's pulled back 2R and stopped me out at a break even on that one. Well, not break even, tiny little profit. DAX break is clean to the downside. Nice exit on the DAX yesterday. Actually, well, it was a nice break on the DAX yesterday. I didn't get on it, unfortunately. I took that off there because I didn't want to hold it because we had the CPI numbers coming out for Germany. And it did do a lovely, lovely clean break. So if you weren't like me and you didn't take it off, well done yesterday. You got a 5R out of it. But we got a clean break on the DAX this morning. So downside targets on this, yeah, nice and easy today. So 3R is going to be back into propulsion, which is ADR, because we've had a fairly decent drop down pre-market. And yeah, we've got a weekly low as well at 150 ADR to the downside. So we'll see if we can get a drop on the DAX. Certainly had a 2-day nice drop on that. Morning, Harold. Morning, Virginia. Right, so there's your breaks. If you're not using a trailer on the FTSE, you're probably still, you will still be in short on that. We'll see where the DAX goes this morning. Just quickly before I go into analysis of stuff, I'm going to be making a few changes to the position trader EA. This is version 1.7. So there's 2 changes, well, 3 changes actually I'm going to add in on a new release, which I might get done today. One is basically being able to hide these buttons, because some people, as you may have seen in Discord, if you're in the Discord channel, are fat fingering that button. And if you're in massive drawdown, when you accidentally fat finger that button, it's accidentally very expensive. So I'm going to put an option in basically just to hide the buttons. So you can either hide them or not hide them. It'll just be an input as normal. So that you can just basically get rid of them if you don't want them there. So anybody that's using the EA for full automation, and I know some people are using it to just pick up trades from other EAs that they've used by using the same magic number. If you're not using the buttons, I will put an option in to hide them away. I do get it that I've never done it personally. I've never managed to accidentally close a position out. But some people might do. Therefore, I will hide them. Functionality wise, somebody else was mentioning yesterday in Discord, and this is something I've had on my mind for a while to try out. Well, not try out, but distancing between trades. There's a number of different ways to do this. Noobs, Harold. Well, it's not a noob thing. I don't know how you can accidentally click the button. Yeah. Because you've got to move to it. I've made it small. The reason I made it small, yeah, when I first released this version, everyone said, can you make this close button smaller so I don't accidentally hit it? So I did that. So you've physically got to move to it, hover over it, and click it. So there's many things that need to happen in your brain and your hand coordination to actually make that happen. I don't know how you can accidentally click it, but if you're in drawdown by 5% and you accidentally click it, I get it. Yeah. The other thing is spacing. So one of the things that someone mentioned again yesterday, and again, I've had other people say this to me, is the way that this EA functions compared to the market reversal alerts EA is different. So with this version of the EA, with the position trader EA, basically, when market moves above your next lot entry line, yeah, the rule is if the price opens above there, yeah, and then the signal happens, i.e. a close below the moving average, it will take a trade. Now, if the open of the candle is above that line, and then there's a whacking great news event that drives price down to here, obviously it will cross below your moving average, and that will take a trade here. You may have a trade there already, and you'll take another one there, or it might be there, or it will be very close. So the distancing between trades as a percentage of ADR, basically what it does is it takes that trade, then plots that distance and says, right, when we open above there, we'll start looking for new trades. I can change the logic so that the actual close of the signal candle that closes below the moving average has to also be above that line. Yeah. There is a problem with both of them. That candle gets you in too close to your previous one. But do you really want to be on that massive bear candle? Probably, because there's a hell of a lot of selling coming on. And if you're short, you want to be on that action. But I get the fact that the entries are too close together. For me personally, if I see the EA to take two trades too close together because I'm watching my charts, I'll shut it. Yeah, I'll close that one and then wait for a new entry. But not everyone obviously is doing that. So I can add that as an option. The problem is now what people are going to do is go, I got an entry, the candle closed here, yeah, right, and it crossed the moving average, but the EA didn't take a trade. And I'll say, well, no, because it's closed below that line and the distance is too tight, but I want to get in on those. So then I'll say to them, well, you need to change it to the other way. The problem is every single time something happens, you're going to look at it and go, oh, I wish it had done it the other way. There is no right way of doing this, of spacing trades out. Yeah, so it's either one or the other. I will put the option in, I think, to give people the option of both. But bear in mind, if you've done any back testing to any extent at all, you've got to do the whole lot again because you're using a completely different strategy. The strategy is enter on a bear candle if price opens half or 3/4 of an ADR away. If you're changing it to you have to be over that distance away, your entire back testing is going to be out. Yeah, so I will put that as an option, that people can select. Yeah, in my opinion, the number of times that happens, you get a candle so big that you get entries tight together is rare, and it's news. That's what it happens on. But if the news has gone your way, why not add more? Yeah. If it then goes back and goes the opposite way, yes, you're double exposed at one level. You can always close one out for a loss. But the number of times it happens is, I don't know, maybe less than 1 in 10. I mean, you look at my positions I've got on at the moment. I haven't got that problem with anything. I haven't got anything that's really too close together at all. It just doesn't happen to me. So it's not an issue that I have, but I will add that in. Another thing I'm adding in, and this is me, is swaps. So as I said yesterday, I've been doing an analysis over the last 2 weeks on the last year to see where things have gone wrong this year. And we've just had parabolic movement way beyond the norms this year. And that's basically part of the problem. The second part of the problem is interest rates. So for those that don't know how swaps are calculated, swaps are basically calculated based on interest rate differentials. Yeah. So when COVID hit, we dropped our interest rates to 0, which meant that everything basically had 0 swaps. Not 0 swaps, but the swaps were tiny. Yeah, very, very, very small. As interest rates rallied, yeah, what we saw was interest rates close together, all of them. So the interest rate differential when we had COVID hit was virtually nothing. Then when the interest rate rally started, the differential was virtually nothing because they all did the same thing at the same time. When the interest rate freeze happened, we had a slightly larger deviation in interest rates because some had gone up to 5.25 and some had only managed to get to 4.35. So there was a 1.5 differential or whatever it was. As interest rates have started to come down, the interest rate differentials, as you can see, are now dramatically different. So the cost to trade the pound Swiss at the moment, you're looking at a 4% interest rate differential, meaning that if you trade short against the Swiss franc, it's going to hurt. Every time you get a swap fee, it's going to be massive. So I've done an analysis on my, I did it over the entire year, but focused more on the last 3 months because in the last 3 months, we've had much wider differentials on interest rates, which means that swap fees have gone up absolutely, dramatically. Which is why the carry trade exists on the yen. Yeah. So the yen always had negative interest rates. So there was absolutely no reason to do anything but buy against the yen, because whatever the interest rate was on every other currency, you would make money just by buying against it. Yeah, that's what the carry trade is all about. Now they've got positive interest rates. That's still the case, but not quite as much money you make on it. But the last 3 months, I've done an analysis on my trading profits over the last quarter, because interest rates have been moving a lot faster over the last quarter. We've had the euro dropping dramatically. We've had everybody moving dramatically. We've had some which are stuck still and are high, like the pound and the US dollar. So the interest rate differentials between the US dollar and the euro, for example, have become dramatically larger, specifically the euro pound. I have spent $12,000 on swap fees in the last 3 months. Yeah. When I did an analysis on a year ago, my swap fees were way lower. Yeah, sub 3k. Yeah, so swap fees have not just gone up, they've gone up by 200 to 300%, which if you're trading 0.1s and 0.05s or whatever, it's not the end of the world. It's still a cost of doing business, but it's still a big cost of doing business. When you're trading large lot sizes, it's wiping out profits. And what it does is it means that when you get, for example, an average price on your chart here, so this is my average price. What it means is if I've got a large swap on my position, when we get back to here, my P&L will show something like a $1,500 loss still. So we get back to the break-even price, which would normally be where I would be able to exit with a break-even, but I've got to go that much further, in some cases, almost an ADR beyond my average price just to get a break even, because the swap fee is killing me. So what I've done is in the position trader EA, I've included in there an input for swaps. So you can see down here, you've got use maximum overnight swap limit and the maximum negative swap cost to trade. So if you set that to true, and I have it set at -5, yeah, what it means is if the swap cost is more than $5 overnight on contract, yeah, so you can see here, the swap short is 4.1 and 3.4 negative, which means it's going to cost me $4 to go short on it overnight, and it's going to cost me $3.4 to go long on it overnight. I'm all right with that. If we move over to another pair, like the US dollar yen, let's go with the Swiss pair, Euro Swiss. Yeah, you can see now, if I go long on the Euro Swiss, I make $2.30 swap on my overnight swaps. If I go short on this thing, it costs me $12 swap fee on a contract. Depending, obviously, contract swap fees, the way they're calculated is based on the amount of time that you hold them, the interest rate differential, and the commission broker, the broker's commission. Yeah. So there's a lot of things that go into the calculation. But at the end of the day, this one is $12 to short, and I make $2 if I go long on it. So as you can see here, it's turned this one green and turned that one red. So what it means is basically I can set the EA onto full auto mode and say, trade this. I don't care which direction you go. But if the swap cost is too high, don't get in. I'm not interested. Because if I have to hold something for 3 to 4 weeks, that will completely negate any profit that I make, and it will be very hard to get out of the position. However, if I've got a positive swap, what it actually does is when you see the average price on your trade, so if I go long, for example, on this, say I had a position there, there, and there, and they were equal lot size, my average price would be there. But because if I held this for weeks, basically, what would happen is my swaps would build up into a positive amount, which means that actually I get a break even before I even get to my average price. Now, you can't just trade positive swaps. You could do if you wanted to, but the market's still going to go up and down, yeah, regardless of what the swap is. And this obviously encourages the market participants, because they all pay this. Banks pay this as well. That's why they call it the overnight rate, yeah. The overnight rate is what the banks pay in interest to hold currency. We have to pay the same. We just pay a different calculation than they do. So this is why things like the US dollar yen, for example, you only go long on it, yeah. So if you go short US dollar yen, it costs you $30 for overnight swaps on a full contract. If you go long on it, they give you nearly $10 just to press the long button. You hold it overnight for a month, you will be in positive. If the market just went like that around your entry and you ended up back at where you were after a month, you'd have a massive profit in your account. This is why the yen is always been called the carry trade, yeah? So I'm going to incorporate this in, and I'm going to set a limit, basically. So the EA basically will just not take trades if the swap fees are too expensive. Now, obviously, swap fees change on a regular basis with interest rates, because swap fees are based on interest rate differentials, yeah? So it's the differential. Is this chart going to... Yeah. So there you go. So it's the interest... oh, no, I haven't got the interest rate differential. Yes, I have, yeah. So these are the differentials, yeah? So you can see, like, with CAD Swiss, it's a positive 350 interest rate differential. So when I go and look at the CAD Swiss, yeah, it's in my favor to buy it. I make money if I buy it. I lose money if I short it. So these differentials basically here that you see, that is what is going to affect things. Euro yen, I make 450. New Zealand yen, I make 550. Yeah, so I want to be trading these currencies only in that direction if I want to have a positive swap. So I'm going to incorporate this. I'm personally going to set $5 as a maximum. So something like this, if it's $26 short in the euro yen and I hold this for 4 weeks, I don't want to do it. I just don't want to do it anymore because it's too costly to me. If interest rate differentials shrink again to the point where they're virtually the same, so we've got interest rates very close together as we had in the run-up and in the freeze, then it's not going to be too much of a problem. And the EA will just trade in both directions. But if there's something really, really expensive, then I will deal with it. So the easiest thing to do is to whiz through every one of them and go, right, that's a 3.4 and a 4.1. So no problem. Aussie Swiss, it's going to cost me $8 to short it. Now, if I'm happy with that, I can go into the EA and say, all right, well, I'm going to set mine at minus 8.5. 0.5. And then basically that will become good. I'm going to need to switch back to that currency because it does it on initialization. There you go. So now it's green because I've said, oh, give me 8.5. That's fine. And it's just basically, it's something that I am going to use myself. Whether you use it or not is entirely up to you. But there's no way I am going to short Aussie yen and have to pay $17 swaps. It's just not on the cards. I will go long on it. It's fine. Because the market's going to, it doesn't matter what the market's doing, whether the market's ranging or whether it's trending down or it's trending up. Mean reversion works in all market conditions. In squeezes, obviously, it's very hard. But if I'm going to get into a squeeze, I want to make damn sure it ain't going to cost me $1,500 just to trade. It's not an option. And it's not until you do the analysis that you realize what these costs are. And like I say, 12 grand is too much money for me to be hemorrhaging in my profit line just to trade. Commissions, fine. Commissions I can't do anything about. Spread doesn't affect me because I'm a position trader. I don't care if the spread's 1 pip or 10 pips. I'm holding for a long time, so I absorb that 10 pips. Absorbing a $1,500 fee just to be a trader is not something I'm willing to absorb. So it's something that I may not need in the future, but I need it now. So I'm going to incorporate this. I'm just figuring out the logic, which I need to do some back testing on. But it's all working as opposed to, if it goes red or green, it says I'm going to trade long or I'm going to trade short. So there you go. So swap on the euro odd. I won't be taking any long positions on the euro odd. I'll only be going short on it, which is fine. Yeah. So I will be still getting in short here. That's fine. So if there's an RSI, there will be an RSI extension in there somewhere. If we stick an RSI on the chart, there'll be an entry short. Probably better let's look at this one because I've got the RSI on there. But yeah, euro odd hourly. Yeah, so I will be getting in short on it if it got extended. It didn't quite, but somewhere around here is fine. But I won't take that, because if it does that for weeks, it's going to cost me an absolute arm and a leg. Yeah, so I'm going to work on those and I'm going to implement them over the next I might even get it done today. Depends what I can get done. I'm out today again, so I might not do, but it's on my list. So I just wanted to let you know I'm going to incorporate that because it's too expensive at the moment. Morning, Virginia. Travel, morning. Is there a button? And if there is a button and it specifically says close, you close it. Do you not think you just close it? Yes. The reason I have that button there is so that I don't have to basically go and find each entry. That it's just basically a get me out. I'm happy. I've got 2.5 grand P&L. Get me out. Ease of use. But I can see how people are accidentally clicking it. I can't, but I understand they are. So I don't know. Morning, Neo. But it's not going to be a difficult thing for me to put a true false show buttons. We've already got one in there, look. We've already got a true false show buttons, look. Show trade buttons for use in the tester. I'll just put one for show trade buttons on chart. There you go. And then if you don't want them, turn it off. Job done. If the trade manager dashboard does also consider swaps and commissions, yeah, it's your P&L basically. Your trade manager dashboard just shows what's in your P&L. Positions to keep pushing, lasting longer. The market moves only with news. Then goes to sleep. The swaps can hurt a lot. Yeah. So this euro pound is a prime example. Yeah. This trade here I was in for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. Euro pound. When did I close that out? Let me sort that by date. Third of October. Yeah, so look at the euro pound, right? To trade this long, I've changed this now, obviously. I'm just going to change it back to 5. Yeah, so to trade this long, it cost me 6.30 to trade it long. That trade there on the euro pound, which I got out on the 3rd in swaps, cost me $1,352. Yeah. So this trade here, I entered, got in. There was an aggressive drawdown. No, I don't know what that was. It must have been aggressive drawdown control. Got in one there. Yeah. But got in, got out, got in, got out, got in, basically got out on the news. Fine, lovely, profitable trade. But $1,350 it cost me to do that. If I'd have traded it short, it would have cost me nothing. It's negative 0.4. So it might cost me $50, $25. I don't know. Virtually nothing, basically, to short it. But to long it, I've got to find an additional distance. Yeah, my average price on this would have been somewhere around here. But to get any profit, proper profit, I've got to move dramatically. What was the profit on that order? Let's just quickly see what the actual profit was. Euro pound. So the actual profit I made on the trade was, right, there you go. The actual profit made on the trade was $120 loss. It wasn't. The actual profit made on the trade was $1,200, but because I had a $1,300 swap, it came out as a negative 120. See how important it is? It's absolutely critical at the moment that we pay attention to these swaps. It's not something I've ever paid attention to before, because whenever I've been trading and holding, and any swing trader needs to pay attention to this. If you're not position trading, you're just basically trading swings over long term. If you're trading daily charts, 4-hour charts, and you're holding for days or weeks, this is important now, because interest rate differentials 5-6 years ago were not these. These are different now, very big. We've gone through a period of very low interest rates. Then we had COVID and we went to nothing. Yeah. So if you look at, so I'm just going on about this morning because it's not so much been an eye opener, but it's been something that I've never really paid much attention to because it hasn't been a problem that I've seen before. But so if you look at the rate on the pound, yeah, and go back to 2019 and before that, so from 2000 and let's go back here, right? So going back to 2012, interest rates are at 0.5%, 0.25%, 0.75%, 0.1%. Yeah. Then COVID happened, obviously, in 2020. We dropped to 0.1%, and now look what's happened. So until 2021, that was normal trading, and it's been normal trading pretty much my entire career. Since December 2021, we're jumped up to 5%. From virtually nothing, maybe a 0.75% interest rate, we're up at 5%. Yeah, this is now a massive part of your swing trading and position trading job. Watching what the hell happens with this. Doesn't matter which way we trade, does it? If it's gone up, it will come down. If it's gone down, it will go up. But if it's gone up and it's going to cost us to do that, I'd rather just not do it. Which means that you can probably trade more pairs, more instruments, and just you're not going to take some of those trades. But anyway, it's up to you if you want to use it. It's going to be there. Runs and hides in a corner. Was it you, Evil, that mentioned about the button then? Morning, Neo. Morning, Ismet. Trade managers. Lee's going to get assassinated. Why? Amanda calls swaps financing. Would that work for me? Just asking, where's the data come from? Your broker. Your broker supplies the data. If you go onto your instrument, yeah, and right click on it and go to specification, your swap fees are there. Yeah, so you look at the, let's look at the one I'm on, Euro Pound. Yeah, so if I go into the Euro Pound, look at the specification. Yeah, the swap fee is 6.4, 6.3, 99999 in this case, and 0.4. Yeah, so this is your broker. Your broker charges swaps. Whether he calls it financing or not, I'd be very surprised if it doesn't say swap there. Whether he calls it financing, Vitaly, or not, I don't know, but it's a swap. It's your commission. It's the overnight bank rate, yeah? You know this thing we look at at the news, yeah? It's called the official bank rate in this particular case. It's the cost of holding that currency. Thanks for the ADR exit option. Yeah, that's also good. Morning, Wozjek. He's got a little blue star. Wozjek. Welcome to the members. I don't even have that. You're obviously not trading CFDs. I don't know. Everybody plays swaps. It's not an option. Unless you're trading futures, obviously. In which case, yes, then it probably won't. Right. ADRs we've done. RSIs, we only have one euro pound. Funnily enough, what we're on at the moment. So we had a 4-hour RSI extension on the euro pound, just above the 70 level. So that's coming down at the moment. We've obviously got this strong pound this morning, which is obviously it's not pulling back. I'd be very surprised today if we rallied because of what the market did on the budget. I don't think the market is going to want to do that. So, are you trading spot forex? Don't know. If you don't pay swaps, you don't pay swap. Fantastic. You don't. I don't think you pay swaps on spread betting accounts either, because it's gambling. It's not real. It's just gambling, isn't it? But yeah, if you don't pay them, it's not a problem. Just turn it off. If you don't want it, don't use it. There we go. Easy. And that will obviously update every time the interest rates change. So what you'll see this number won't say it doesn't change. It doesn't really change. It only changes if interest rates change, obviously, because they're passing the costs of holding a currency to you. So yeah, there's not a lot else happening today. It's all about the yen so far today. So the news on the yen obviously has given the yen a bit of a boost today. It is a small move in comparison, and obviously we are sitting around. So Swiss, for example, yeah, my Swiss yen short that I've got on at the moment is costing me a lot of money to hold it. I'm paying $13.83 per contract to hold this thing short. Yeah, so it's going to build up. So I don't want to be in this for long. I want to be out as soon as possible. If this thing now goes sideways for 6 weeks, it's going to hurt. I've been manufacturing. You do pay it, yeah. I'd be very surprised if you don't pay it, because it's a cost of doing business. This is what interest rates are. This is why we have interest rates. It's not an option, really. It's just a thing. What's the time? It's 8:38. So I can whiz through all the pairs this morning, but if there's anything specific anyone wants to look at, let me know. Hedged on the DAX this morning. Where's my TPs? Okay. We got a gap fill on the DAX. How far is that gap? 2.5 R. So DAX, we've got a little gap fill in play, which when you get a gap fill, you quite often get a bounce out of it. So I might go for the gap fill today. It's a bit of a risky one because it's only 2.5 ADR away. 2.5 R away, but it is a gap. So I'm going to go for the gap fill on that one today. And then I will watch that. I'm just going to put an alert there just to tell me when we get there. Just so that I can watch it in case I need to re-hedge it. But yeah, that's gap fill to the upside on that one. Downside. It's quite an old propulsion gap. I think they'll probably run that. We got a monthly level, so I'm going to put my downside target just above the monthly, which is this blue line. So I'll be using that as potential limit order triggers at the lows. So see if that one plays out today. Not a lot of movement so far, and the FTSE's dead as a door now. I think the market's hanging around waiting to see what happens with the pound today. Right, so news-wise, obviously, if nobody's got any other pairs to look at, that's great. But news-wise today, we've obviously had the yen, which has strengthened. We'll see if that one continues. There's a good chance it might do. The euro, basically, we've got CPI flash estimates at 10 o'clock. We kind of know what they're going to be because the German came out yesterday as positive, so these will be positive in all likelihood. And the main news this afternoon is all at 12:30. So unemployment claims will give us a clue as to what's going to happen with the unemployment rate tomorrow. Non-farm yesterday came out as a quite substantial positive for the US. The US didn't manage to do anything with it though. So it does seem to me that the US is basically exhausted now. This move that we've had some positive news coming out and it couldn't really move. The GDP figure also dropped though. So it may be that we got that cancelled out. But if we get some negative numbers coming out on unemployment claims, which is probably unlikely because of we had obviously positive employment change with non-farm, it may be that the PCE is the thing that can help us out today by dragging that down. But we'll have to just wait and see what happens with the news. CAD GDP is forecast to drop to almost recessionary levels. So there could be some movement on the CAD. If that comes out as a negative, it means that the Canadian is trickling into recession. Recession is basically 3 months in a row as negative. If they get month one negative, the market won't like it. So there is potential today for that GDP number to send the CAD a little bit over a cliff. Obviously, I would like that number to come out positive because I have a US dollar CAD short. So I would love the Canadian dollar to power up like a crazy thing. I'd also love the PMI figures to come out as negative for the US today. However, I'm not in control of that. But yeah, big run. We looked at this one yesterday. I posted it in the Discord channel. This move here, the entire month, this month on the US dollar CAD, when you look at measurement of price action, obviously with market structure and trend, you're looking for higher high, higher low, higher high, higher low, higher high, higher low. That's what we class a trend as. When you look at a daily chart this month, we've had literally one candlestick there that put a lower low and a lower high in. Yeah, we've got one there that put a lower low in, but put a higher low in, which is a symmetrical triangle bull pattern. Other than that, there has not been one negative price action day the entire month. Every single day is higher highs and higher lows on this thing. It is absolutely parabolic. 9-day run, yeah, followed by one down day, yeah, of less than an ADR, followed by a bull day, followed by a bull day, followed by a bull day, followed by indecision, followed by a bull day, followed by a bull day, followed by a bull day, bull day, bull day, bull day. Yes, it's a bearish candlestick, but that is a bull day. Yeah, higher high, higher low. More bulls in there today than there were bears. They didn't win the day, but it was. So today, I'm looking for this high to hold. You can see I've got a stop loss placed on this aggressive drawdown control position above that high. I'm looking for a bear day. This, if it happens, this will only be the second bear day we've had in an entire month. However, if it does happen, for those of you that have come into the members streams, you can see exactly what is playing out here. Yeah, this is a very strong bear price action pattern we've got forming. So if we can close bear today and put a lower low and a lower high in, that is a beautiful 3-bar reversal setup, which means hopefully next week we'll get that move. But obviously this is all to do with elections, so I suspect more likely we're going to sit around, unfortunately, but we'll see what happens. I could do with a couple of down days on this, obviously just to get out before the elections, but not a lot we can do at the minute. It's costly, this one. And if you look at the cost of doing business on the US dollar CAD, I am short. It's also costing me $9.60 to hold the thing. Not good, is it? Yeah. So not only am I in drawdown, not only is my average price not the break even, but it's costing me to trade this thing as well. It's all against you. This is why this is so important. Yeah. It's a really good bit of analysis I've done. I'm quite happy with myself about this one because whenever I can save money, I'm up for it. And this is the biggest cost I've had in trading ever. And it's something that kind of slips under the radar because if you've been trading for any period of time, I've been doing this for 17 years. I've never paid attention to swaps because it's a cost of doing business you can't control. However, since I've been position trading, which is the last kind of 6 years, I've never had a differential that's been costly. It's only in the last year to 18 months. And the only reason I've noticed this is because I've had a year this year, which is my worst year ever. So it's prompted me to analyze this. It's the same as everything in life, isn't it? If everything's going well, you don't pay attention. You just get on with it. If it's going well, you just keep doing what you're doing and everything works. When things start to go wrong, the people that make it and don't make it are the people that go, why? Yeah. And this is why, partly why. Yeah. Over 30 grand in swaps this year. 30 grand. Yeah. Unbelievable. It's an unbelievable amount of money that I've hemorrhaged this year just for doing what I've been doing forever. Yeah. So it's a really important thing at the minute, unfortunately. It does also mean that it is going to limit the entries that you can take if you decide to pay attention to it. So obviously you could also use this to only carry trade if you wanted to. If you set this to 0, what it'll do is it will only take positive carry. So it basically means you can't trade the Aussie CAD because it's going to cost you money whether you go long or short. Aussie Swiss, when it loads. Yeah, if you go long, they will pay you to trade. So I'm only ever going to trade long Aussie Swiss. Yeah, Aussie Yen, I'll only ever long the Aussie Yen. I will never short it. Yeah, Aussie New Zealand, can't trade it because it's going to cost me money to trade it. Yeah, so you could always do this, use this facility as I just want to go long. And if you look at what happens with these particular types of instrument, you'll find that they are, and this is the Swiss is a bit different, but you'll find that they often will be the trendy ones. Yeah. So if there's a positive swap, it's worthwhile the market just doing that one thing because it makes them money. There are some swap free accounts. No, then it's not. There's not. It's a lie. Most they give you 1 week free of charge. Oh, 1 week free, yeah. But it's not. They're not swap free. Yeah, I've done a session on this. Yeah, these Muslim accounts, or they're not called Muslim accounts, are they? They're called. Are they Muslim account? I don't know what they are, but basically, in certain religions, it's illegal to gamble. Yeah. This is seen as gambling. Therefore, what they do is they give you a swap-free account. What they do is they replace the swap with commission. They're 3 times more expensive to trade. Yeah, your commissions are 3 times higher than the actual cost of the swap would be if you were to hold a position. They're not swap-free. If you look at it, Islamic, there you go, Islamic accounts, they're called. Yeah, they all do them, but they're not. You have what's called an overnight financing charge, right? What does this look like? A swap. But it's not. It's a cost. It's a charge to finance. So they charge you to trade in a different way. It's the same thing, but these are actually more expensive. If you do the math on this, if you go and put a trade in and hold it for a week, and then you put a trade in on another account and hold it for a week, this comes out more expensive. They call it swap free. It's not. You're actually being penalized for being Islamic. It's a con, total con. It's not a con. It's just a different way. They fully explain what they're doing. People just don't realize it. As the name suggests, swap free trading account eliminates swap frees. Swap free is charged, blah, 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 blah. The accounts are interest free, making them ideal for Muslim traders that follow Sharia law. Yeah, but they do charge you a fee in a different way. So they milk you. They always milk you. That's what they can't do. Basically, brokers have to pay overnight swap fees, yeah, because they are borrowing money, yeah, and they take out, basically what brokers do is they take out a loan against your account. So when you put your money with a broker, there will be a loan taken out opposite of your deposit. Yeah, they have to pay interest on that loan. What they do is they take that loan interest, they calculate what it is, they add a commission onto it, and then they pass it on to you. So when you deposit money into a brokerage, they then make money on you by charging you higher interest than they get charged. So they mark up the interest. Yeah, I think that one did a calculation. There you go. How are swap fees calculated? Pip value times swap rate times number of nights divided by 10 plus broker commission. It doesn't say that bit in there, but there's a broker commission on top of it. So if they get charged a 1.2% interest rate differential, they will pass the swap fee on to you at 1.3. So they, just by you putting money in the account, they instantly make money on the loan interest. You can't, brokers are the best job in the world. Yeah. Every time someone presses a button, you make money. Every time someone makes a deposit, you make money. Guess what? When you withdraw, they charge you a commission to withdraw. They make money. Doesn't matter what you do, every penny that goes into a brokerage is theirs. Yeah. If you've got $250,000 free, go and set a brokerage up, because that's what it costs to start one up. And obviously, if you want to do it in multiple countries, multiply that by the number of countries you want to go into. So look at somewhere between 5 to 10 million, and you can get yourself set up as a broker. Then you've got to find customers. You're going to need to spend half of your marketing budget on replacing the customers you lose, because 60% of customers lose 60% of their account in 60 days and they give up. So you've got to constantly replace all of your customers. It's not a fun job, is it? But very lucrative. Anyway, there we go. That was a bit of a different session this morning, but we'll see what happens today. So main thing I'm watching today is the pound. I'm interested to see where this goes. And I'll be watching the Swissy as well, Swissy yen, see if we get some continuations on that Swiss. So we've got a nice propulsion break there. So we'll see if they add more into these shorts. At the moment, it looks like the longs are adding back in on that move. So battle lines basically are drawn here and here today. So we'll see where we break. See if the yen's got any legs left in it. Right, that's all I've got for you today. There's no member streams today, and there's no member streams tomorrow because I'm off out doing other things. My youngest is doing Duke of Edinburgh today, so he's walking for 3 hours. Should have seen the look on his face when I told him it was going to be about 12 miles. What? Yeah, I'm out doing things today. So yeah, I'll be back tomorrow, same time. If you've got anything you want to know or any questions, come in Discord. I will see if at some point later this afternoon I can get that finished off on the Position Trader EA, but it might take me a bit longer because I need to test it. So, and for those of you in the members streams, I put the EA, the Leasy EA in the group yesterday. Nobody's given me any feedback yet, so I assume you're all still testing away. But I put the EA in the group for you to play with. And yeah, we'll see what people find. But it's pretty good strategy for position trading. I kind of like it. It's a scalping strategy basically, but yeah, it seems to be pretty decent on most instruments, but some instruments like the yens, I don't think it's going to work. I haven't really done any thorough testing on it on the yen pairs, but I'm pretty sure would be the one with no tick data, wouldn't it? I'm pretty sure it won't work on the yen pairs. And there we go. Yeah, it's going to struggle on those because they're going to trend too much. It's going to be suited to all commodity pairs and all finance pairs. So pound, euro, Aussie, CAD, New Zealand, Swiss and yen. I don't think it's going to be much good for. It's not. Yeah, it's not going to work on the yens. But that's fine. They're for trending strategies. This is not a trend strategy, is it? I'm about to post some results in the members group. Evil, go for it. I was struggling with it a bit. How do you set a hard stop like 180R? You can't. It's not. It doesn't use a stop loss, AZ. It's a position trading strategy. But if you want to set a hard stop loss, you can use any of these exit strategies. So you could use exit at money. So when a trade gets into loss of, so you'd need to work out roughly what 1 ADR is going to cost. So if you're risking, an easy way to do this, can't risk money on this one, can you? You'd need to work out roughly what an ADR is in cost of money and just set that to minus. Doing it visually, you'll be able to roughly work it out. But if I set it to minus 200, that basically gives me, it will stop me out when it gets $200 in loss. Shut the position. There you go. So that trade there was short. Closed it out $200 in loss. So you'd have to do that, but that's not the point of the strategy. Yeah, so what you're trying to do is make this into a different strategy. It's a position trading strategy. So you could come up with a new strategy if you want to, but that's not what this is. Yes, on yen it sucks. Only on Swiss yen it's livable, is it? I probably haven't got data on Swiss yen on this account. I'll see. I need to take that off because I don't want to exit like that. And haven't got any data on it. MT5 position EA. Highly MT5 pos EA. That's a statement, not a question, Adrian. I don't know what you mean. With such a high strike rate, I thought a hard stop would be good to let its natural edge work. You could try. No, it won't work. If you use a hard stop, you're basically not giving the whole edge of the strategy is that it has room to breathe. Yeah. If you use a hard stop, you're removing the edge, which means the strike rate will disappear. The strike rate of 79%, which this EA has, can't show it now, but the strike rate that it has is there because it is allowed to breathe. If you put a hard stop in it, you're going to get stopped out, which means the strike rate is going to collapse, which means the edge disappears. It won't work. But ask me. We did a session on Tuesday on this, yeah? And how the effects of probabilities work on edges. If you add a stop loss and a risk reward ratio, you will always come out with a net zero unless you can get the strike rate up. But by adding a stop, you will remove the strike rate, therefore removing the edge. I haven't tested it, but I'm 99.9% sure that will be the outcome. But you can test it by yourself by literally just putting that in. So if you just do some tests and use that input that I just showed, that will effectively do the same thing. Yeah, Swiss yen it's working on because you've got two trending pairs, which quite often will cancel themselves out. But it's not, I mean, it's not really profitable. It's not done a lot of drawdown either. It's done 1.9% drawdown. So, but it's not really profitable. You know, it works, but it's not for yens. Mean reversion for Swiss and yen pairs, all mean reversions for Swiss and yen pairs are hard because they're trending instruments. Because we've got the carry trade, haven't we? That's the whole thing. You look at all of these. Yeah, so this is the euro odd. Sorry, that's the wrong one. This is the CAD yen. Yeah, massive positive swap. Look at the Swiss pairs. Massive positive swap. All Swiss pairs and yen pairs have a positive swap because of the interest rate differential, which makes them trend by nature. If you have a positive swap and a high interest rate differential, you will always have a directional bias. But on its way to its directional bias, it still does this, but it does that more. So, mean reversion is a lot harder to work on the yen and the Swiss, which is why I've kind of eliminated them in the last 6 months. Partly because obviously the cost of trading them is too much. Look at that, $40 to hold that short, that pound yen. $40. No, thank you. I am not hitting the short button on the pound yen anymore. Not going to happen. Can the MRA be added to the back test of this scalping strategy? No. It's a different strategy. It's nothing to do with the market reversal alert CA. It's a fib. It's a daily fib scalping strategy. XRupdate.news. If you want to know about it, join, become a member. Otherwise, it's in the members section. Does not work properly when money targets set anymore. MT5 does not work properly when money targets set anymore. Cash target hits and it fails to close the trade, but works in tester. I've seen it fail many times. I don't know. I'd have to test that. I can run some live tests on it. If it works in the tester, though, the logic in the tester is the logic for live trading. Adrian, if you are having a problem with it closing out on a specific thing that it should do, you'll have to send me a screenshot of it not working and have a look in your expert and journal tabs, because it will probably be trying to close out, but it might be having a problem closing out for some reason. Are you FIFO? If you are FIFO, you might have a trouble with position trading. You might find that with these FIFO brokers, some of them enforce. There's a rule in FIFO. Obviously, FIFO is the rule. First in, first out. So when you press that button, or when the EA gets to a target, it closes the trades. Yeah. Most FIFO brokers, in fact, the vast majority of them, will go, that's not the first one, I'll leave it. And then I'll move down and close the next one. That's not the first one, I'll leave it. And it moves down and it goes, that's the first one, I'll close it. Then it repeats and it closes everything out. But it gives you an error message saying, you must close the first one. You must close the first one, because it's a rule. But they will get around that rule. Some brokers don't. So I'm not FIFO. Right, okay, well, it's not that then. I don't know. You'll have to DM me in Discord and send me your set file. And what I'll do is I will put that set file onto the 1 minute chart and reduce everything down dramatically and just get it to try and break. It might be that there's a bug been introduced. No one's mentioned it. So it may be a bug has been crept into it, but I'll have to have a look. So send me some info on it and I will investigate. Right, I'll leave it there. Anything you need, let me know. Other than that, I will be back tomorrow morning. Be aware, obviously, this afternoon, we've got volatility on the US and the CAD. And then tomorrow is non-farm payroll day. So it's the unemployment rate, which is the thing that the Fed are watching the most at the moment. Bailey, by the way, the Bank of England have kind of confirmed that we're going to get 0.25% next week, at least. I say at least, but yeah, so there's a potential there basically for a shock next week on the pound as well. So interest rates coming down may have a different impact on the pound next week based on what the budget is now doing, because obviously the market has got a different outlook on the pound now to what it had before. So typically interest rate drops will drop the pound. And that is what we're forecasting. But as you can see from the pound pairs, they've been going up quite a lot in the last week or so. Most of them, not all of them, which means that the market has been necessarily not factoring in a drop in that interest rate. So next week we could have quite a big drop on the pound. So just be aware of that. But that was confirmed yesterday. The market is expecting a drop, especially after the budget. So basically, that all came out in the budget. But anyway, so tomorrow is obviously the most important thing. It's non-farm. So we'll see what that does. And then next Tuesday is election as well. So absolute chaos next week. Fun, hey? Right, have a good day. Anything else you need, I'll be in Discord. Other than that, I will see you guys tomorrow.